for watching. Today I'm working more on my stock market model in Python. So yeah, like and subscribe if you think this is interesting. Before I get started on the project, I'm going to go over my goals, what I've done so far, and what I'm going to be working on today. So I have two goals for this project. First is beat the S&P 500 by a significant margin while staying market neutral. So the S&P goes up on average 6% per year. I want to do 3 to 4 times better than that, 18 to 24% per year. But I want to stay market neutral. So it shouldn't matter whether the whole market's going up or down. I should be able to implement my strategy regardless. So this is the overall outline for the project. I'm starting with basically I have data going back to 2011. I'm isolating a universe of stocks with that. I'm only using real estate investment trusts, ADRs, which are foreign stocks listed on the US stock exchange, and common stocks like Apple and Tesla. And I'm also cutting out everything that's in the bottom of the volume. I don't want low volume stocks. I want high volume only. And I'm cutting out penny stocks and anything that's crashed over 50% in the last year. Once I've isolated the universe, then I'm training a returns model on it. I had what I thought was a really good model. I'll go over that in a second. And now that I have a returns model, the final step is to implement the portfolio model. So I started this. I should say I'm writing all this code in Python. So I have a secondary goal, which is to generalize the Python code I've written so that anyone can make advanced models for themselves. So the model's only using features from price data right now, but I have isolated the universe and defined the model and trained the model all in under 100 lines of code. So if you're interested in that, you could find the GitHub link in the description. You can get the whole project there and do basically the same thing I'm doing. So I started this at the end of last year. Here's where I was by the end of January. I had a model, but it was basically too fragile to implement. And then needed to clean up the code base, make it more flexible and diverse. That's what I had done by the end of February, and I incorporated all of these features here. At the beginning of this month, I thought I had a really good model, and here's my reasoning. So this is the model, and I'm looking at the following metrics, the ones highlighted here in the red box. So first off, information coefficient, that should be 0.01 to 0.02. I'm getting 0.047. Now this is for a single model, but that's still way above my goal. That's basically giving me the predictive power of the model. How good is it at predicting? These next metrics, the standard deviation of the information coefficient to information ratio, both on a daily and annual basis, and the T statistic, those are all basically stability metrics. How stable is the model? So the standard deviation should be 3 to 13 times the information coefficient. It's about 3 times, so that's good. Daily information coefficient to information ratio should be 0.03. I'm getting 0.3, so larger by an order of magnitude. Same for the annual one. I should get 0.3. I'm getting 2.2. Once again, larger by about an order of magnitude. And the T statistic, I want it to be 1.98. I'm getting 3.75. So it looks really good on these metrics. Secondly, when I pull up the decile analysis of the model, basically the bottom decile, bottom 10% should be the worst performing. Top 10% should be the best performing. And you see when it's grouped in this way, according to decile, each decile is higher than the previous decile, which means it's monotonically increasing. And so this is all exactly what I'm looking for. Furthermore, when I did the walk forward analysis on this model, I saw that the information coefficient never dropped below 0.01, the lower threshold of my goal. And actually, 2018 was the only year where it dropped below 0.02, the upper threshold of my goal. And the information coefficient to information ratio on an annual basis never came close to my goal of 0.3. So for all these reasons, I concluded it was a really good model. However, when I went through and tried to get a good portfolio on this model, I ran into the following problems. So on the single model that's tested from mid-23 through the beginning of 26, I got really good results. It was pretty easy to implement a portfolio model that worked. However, from 2016 through 2022, it was very difficult to get something that worked. So basically, all the wins I have here are since mid 2023. So, something's going on. I think it's because the dispersion of the market increased significantly after 2020. It could also be because we entered a new regime for interest rates in 2022. We went from basically zero interest rates to now we have non-negligible interest rates. So it could be that. Also, when I look through it, the walk forward analysis, I see that it's not perfect. So that year I showed was perfect. 25 looks pretty good. 24 looks perfect. 23 looks like it has some problems. So I incorporated hierarchical risk parity for the bet sizing, but the problem was I just wasn't able to get a good strategy. You can see here. And this was incorporating everything at once. If I optimized from mid 2016 through the beginning of 2016 through mid 2018, I was able to get positive in that range, but then it did poorly afterwards. So this is the inverse of the problem I just showed. Basically, it's the early regime and the later regime. Something that's trained on the early regime obviously does well there, but it fails on the later regime. And the inverse is happening. If I'm getting something that works well on the later regime, it doesn't work well on the early regime. So I reran model 22. These are the decile analysis results. And I plotted the results here. Scripts. Let's go to data, models, model 23 walk forward. And here we go. These are the metrics. So it looks pretty similar to the earlier one, but now I've dropped out a lot of features. And so the question is, does this improve the portfolio performance? So I can get walk forward portfolios. All right, so now get that guy up. Model 23 walk forward. Okay, so let's see if this runs. So it's happening in load models. 192. Retrieve model of fold info. So there's some error. Portfolio. Retrieve model. So it's just failing on the last fold. Good. Uh-oh. I hope this doesn't happen for each one. Might have a problem here. Hey, Rua. I'm not sure. Rua Havagela. How are you? Alright, so let's give it advanced models. Desktop work, stock market, scripts. So let's give it portfolio, advanced models, clean analysis, feature engine, and then, okay, let's give it all those. And then it needs portfolio explorer. Hey, Sir Night Night. Okay, I'm gonna go to the bathroom real quick. I'll be right back. Rasab, bro. Good. Alright, so I should have the portfolio. I'm like introvert. Yeah, that's true. But you graduate when you make it up out of the streets. Teach us Jesus. Okay, look up nowadays nostalgia streetness. Hustlers, that's if you're still living. No, well, yeah, I like swing trading, but my last trade was oil, and I haven't looked at the markets much since then. Oil did really well, then it fell back down. I sold it basically at break even, slightly below break even. Full data of predicted return. Well, my goal is to, I mean, I'm learning right now, but my goal is to have a something that works. I want to have it spit out, what to buy and sell and automate that. So my goal is to go live, but I don't have anything that works well enough to go live. Good. You got any interesting trades going on? That don't kill me. You don't give a fuck what they all say, right? Austin and Kristen Dior. Damn, they don't make them like this anymore. Do anybody make real shit anymore? No, for reason war? You mean you're not trading because of the war? Or, yeah, what's that mean? Because I can't get much longer. I know I got to be right now. Okay, this is still running. Let's see if it goes. If you got a man tonight, if you made plans tonight. Night, sir, night, yeah. Bow in the presence of. I'm about to hit that part. Because he's Louis Vuitton Dynamite. Her to do anything that Klondike. Well, I'll do anything for a Blondike. And we'll do anything when the time's right. Buy Dubai real estate stock. Interesting play. But all I know is when the Russia war started in Ukraine, Russia-Ukraine, I kept thinking I need to find a way to buy rubles. Rubles, right? In Russia? Yeah. The war is exciting. We don't like war, but it makes things interesting in the markets. Come on, hurry up. Alright, so... Yep, I'm from the USA. Since Prince was on Apollonia. Okay, we've got the portfolio. Now we can run it. Test scaled HRP. Do it faster. It makes us stronger. Oh, you're from India. Hello in India. Isn't it like evening there? Your market closed not too long ago, right? Okay, let's turn on the scaled HRP and see how does it perform. $4:30 a.m. my time. West Coast US time. Yeah, hopefully that'd be interesting. Okay, here are the results. That looks pretty good. So definitely better than it was performing before, but this is with the scaled portfolio strategy. So when is this region from? 2021, end of 2020 through end of 2021. It did have a drawdown, but that looks not bad. I mean, it's not going. It ends up flatlining at the beginning of 2021, and I'm negative returns on the whole time, but that's way better than the portfolio was looking earlier. Ladies in the house, and bounce. Got me feeling so aroused. So what if I change BPS to 0? This takes a while to run though, so what if I do 10 longs, 5 shorts? Let's do 10 longs, 10 shorts. Smooth predictions is true. Change that to false. But let's increase the buffer multiplier to 3. I go for mine, I got to shine. Hey, I'm good. Test manage, back test optimizer, test manage, back test walk forward. $50 told me go ahead, switch the style up. I think to go US, you're gonna come to the US? So what did I increase the buffer to? 3? No, I mean I saw it. I didn't pay much attention to it. Yeah, I don't really know what to make of it. I'm kind of tuned out of politics after the oil thing. So this looks pretty good. But it suffered a bad loss in 2020. It basically got killed in the pandemic market. From, yeah, beginning of 2020. So it totally failed on the 2020 crash, but it did well otherwise. Interesting. Okay, I think I'm onto something here. Because this new model isn't having the same problems. When I woke, I spent that on a necklace. So holding period, HRP look back, smooth predictions is false. So what if I try 20 long, 10 short? No, I'm not online all day. Yeah, I have a normal job, so I have to go to work. They'd be on my ass if I was online. back in my day. Longer drawdown, lower return. Yeah, so if I bias it to the longs, it does worse. Okay, what if I try this but do a 20-day prediction? What's your pleasure? Life is depending how you dress Alright, so let's change this down to 5. Oh, we probably don't need the 5-day features. Okay, so I have a feeling this isn't gonna work well. Let's see how the first decile analysis looks, but I think I need to remove 5. You can message me in the Discord. So my problem's gotten a lot smaller. It's because I'm getting positive post 2016. If I got 20% returns over 3 years, 30% returns over 16, 17, 4 years. So not very good, but still slightly better than the S&P, but then I would have done really well in recent times. So that looks not great. It looks good except for the top decile. So let me try running it again without the 5-day features. Actually, there's too much to change. So I'm gonna have to run it with all features and then trim it down after that. Well, thank you, Ruahab. Alright, so this is what I need to figure out now. Can I get a good strategy working? Alright, so I think I'm going to do Model 23 next. Model 22 with a 38-day target. Then trim out the features I don't need and run Model 23. Because this looks better. I am better on the early regions, but this COVID area is a problem. I have to go to the bathroom again real quick. Damn. Here we go again. Everybody's saying, made it to a jam, but everything I'm not made me everything I am. I got a lot of cheese award. Here we go again. Alright, what if I do the basic HRP? Here we go. Here we go again. Everything I'm not made me everything I am. But I got the facts to back this. Just last year, Chicago had over 600 caskets. Man, killing some whack shit. Oh, I forgot. Set for win. That's enough, Mr. West, please. No more today. Once again, that looks pretty bad for 2016. Here we go again. That looks pretty good. 550-day drawdown now. 15% return per year is good though. Yeah, can't study more. What's taking this so long? Yeah, yeah. Rolling nav. Been home again. Met this girl when I was 3 years old. What I love most, she had so much so. She said, "Excuse me, little homie. I know you don't know me, but my name is Wendy, and I like to blow trees in." Make them straighten up their hat, 'cause she know they soft. Okay, so basic HRP does worse over COVID. So what if I turn scaled back on and then penalize it at 75% instead? Raise the goal volatility. Say we rebalance every 5 days. That should reduce the turnover significantly. Now and then. If you're really careful, then you wouldn't have never hit the airport to follow your dreams. Sometimes I still talk to her, but when I talk to her, it always seems like she talking about me. So we basically do really well except for the COVID. If I could avoid the COVID drawdown somehow, I'd be fine. Do you think about me now and then? And the overall return's crazy, but we dropped from double to half. Oh, so brutal drop. I couldn't stomach that in real time. Alright, so let's see how that does. Jay and yay so shy. Alright, here we go. It should run pretty soon here. Annual return 20%. Max drawdown 50%. Yeah, so same thing. I'm off the baseline. Nothing handed out. I'm about to take mine. Yeah, that's really the big problem. It's doing great except for COVID. But by the Black Album, I was blacking out. Big brother got a show up in Madison Square, and I'm like, yeah, he gonna be there. Okay, so that's it for today. I've been going for about an hour. I gotta get ready for work. Thanks for watching. Tune in tomorrow. I'll be working on this some more. Adios.